Welcome to another stage analysis video. It's Sunday the 9th of July 2023. Lots to get through this weekend as always. Going to start off with the major index update, starting with the S&P 500 here on the weekly chart. Continues to consolidate in its early stage 2 at the moment. It's been in stage 2 for a good couple of months now. You can see our combined percentage of stocks above the 50-day, 150-day and 200-day moving averages combined, which is a custom indicator that I do for the members each week as part of the market breadth weight of evidence approach that we do for the method. It's currently sitting just at, I think it's 52.88% to be precise, but obviously very much in the mid zone. We consider this mid range here between the 40 and the 60% level in the stage 1 zone as such. This is considering the entire market, so this looks at both the NYSE and the Nasdaq markets in total. So generally, once you get in a stage 2 advance, if you go back over the years, it needs to get above 60% level in order to be in a market stage 2 advance. But you can see the S&P 500, the Nasdaq, and the composite all pushing into early parts of stage 2 at the moment, but we do have the other indexes like the NYSE, Russell 2000, etc. that are not. So hence we've got this mixed, slightly leaning positive result, 52.88% at the moment. So just past the midline at the moment, but very much in what we consider the neutral stage 1 zone for the entire market. But you can see there's a strong, as we said, strong divergence with the S&P 500 here and starting to form a short-term base structure. I talked about this last week's weekend's video with the short-term potential buying climax, automatic reaction. As I said, this was a potential secondary test. As although it looked strong last Friday with that move, it actually was a small up thrust as a secondary test there. So you can see it didn't manage to push any higher. So it was on stronger volume. See the volume bar here, but failed to actually commit to a breakout move any higher. So actually what we see here is a classic Wyckoff, start of a classic Wyckoff structure. Your phase A, as we see, so buying climax, automatic rally, secondary tests. So now into phase B of the structure here. Did a big reversal move on Friday. It was looking stronger, holding above this 1 ATR level. So the 1 ATR level is this line here. So it's 1 ATR above the 21-day exponential moving average. So roughly a month of trading days here. So you can see we dropped just back below that on Friday with a close below and obviously a reversal candle there. So still in the middle of the range, but just moving into what we consider neutral territory here. So consider neutral between the +1 and the -1 ATR level. So in this range through here. So potentially, obviously looking for this to develop continue to develop the base structure at the moment. We've got earnings starting at the end of the coming week with the major banks kicking it off, so JP Morgan, etc., and then start to move into broader stocks as we get into the following weeks after that, for the next 2 or 3 weeks after that, as it starts to pick up into the early part of August. So obviously good to see the markets basing ahead of earnings. We might obviously give us some new directionality once earnings results start to come out. We'll be looking for those significant bars, the earnings gap bars, in obviously whichever direction they take. At the moment, S&P 500 above their 20-day moving average is sitting at 65.6%. So it's dropped back out of the upper zone here. So as I've said before on previous videos, it tend to hold above the 70% level when you're in a stronger uptrend, the short-term uptrend, so i.e. above the 1 ATR level. So we've just dropped back below that as this has dropped below the 1 ATR level. So generally with a pullback, you want to see it hold in the mid-range, not drop much below the 50% level there. If it starts to drop back below in the 50% level and towards the lower end of the scale, then that would signify a potential change of direction in the short term there. So at the moment, still holding in a new base structure. Nasdaq doing very, very similar. This is Nasdaq 100. So 3 weeks now in a base, sitting at 73% above their 200-day moving average. So this one showing obviously a strong stage 2 uptrend in both breadth and in the index chart itself here. If we look to the daily chart, again, very similar behavior as the S&P 500 here. Short-term buying climax, automatic reaction, secondary test this week. reversed back down and closed just below that 180R level. So turning to neutral, so it dropped off. The percentage of stocks in the short term has dropped down to 52%. So back right in the mid-range of the chart here in terms of breadth. So again, if this starts dropping any lower here, then potentially could be a change of behavior in the short term. You can see it hasn't been back below that level since the latter part of May. Look at the Nasdaq Composite, again, very similar to the Nasdaq 100. 3 weeks of a base structure here. We've got 40.13% above their 200-day moving average at the moment, so still languishing in the lower half of the chart. So it's failed to get back above that midpoint for a while here. Had a brief pip above it the start of late end of January, early February time, but then dropped below very quickly. It was only a single week. So you can see we haven't been back above the midpoint since all the way really back in July 2021. So 2 years of the Nasdaq Composite languishing in the lower half in terms of breadth. But to some of the leading stocks here have obviously managed to push the Nasdaq Composite out, mega caps, etc. So, but the broader market, as we can see here, still sitting at 40.13%. So it's still on the borderline between the neutral and the bearish range, even though the index is obviously pushing higher in stage 2 and consolidating. Again, daily chart, buying climax, automatic reaction, secondary test, short-term base structure developing at the moment. So obviously which way this breaks will give us our next clue. But very, very similar to what we're seeing in the Nasdaq 100. NYSE, on the other hand, still consolidating within its stage 1 structure. So I'll see the stage 4. We've got this broader structure that's been in for a while now, so still hovering at the top of that range. See the shorter term structure here. You can see that it's been mostly in for the course of the last 7 or 8 months or so, still testing the top of that range for the last 4 weeks now, but failing again this week to follow through. If it can get back above this 16,000, 16,200 area convincingly, then potentially could start to move into stage 2. You can see this is a significant level, so we look for significant levels when we're looking for obviously potential moves to stage 2. So this has obviously been tested numerous times around this zone. It's a loose zone, but it's very, very much been tested so many times throughout the course of the last few years. Obviously hitting it again right now. So this is our significant level. So even though it did break above a level recently, still within near-term resistance and not above this significant level. So we need to clear this convincingly, and then potentially the NYSE could move into stage 2 as well. But 60.32% of stocks in the NYSE above their 200-day moving average. So 20% stronger than the Nasdaq Composite there in terms of the breadth for the index. So if it does start to break out here, we could obviously see that expand into much more positive territory, that like what we saw back in the latter part of 2020 into 2021 here for the NYSE. As you can see, it was above the 70% level throughout this period through November to August, before it started to dip off as the index started to develop in stage 3. You can see the breadth obviously tailed off significantly during that time before it started breaking down into stage 4. And obviously once it started to break into stage 4, it was very, very weak at the time. So we need to see that continue to improve. Look at the Russell 2000 again, very similar behavior to that in terms of testing a significant zone. This range here had been tested so many times over the course of the last few years. So you can see obviously a few up thrusts above it that have failed and come back into the range again. So we're looking for a new, obviously, push above that in order for it to move into stage 2. Again, at the other end of the scale, if it starts to break down the bottom of here, it would then move back to potential stage 4. But at the moment, a near-term move back above the 30-week moving average and 10-week moving average would be a short-term negative. So if we look at on the daily chart, that would also take it back below the 200-day moving average there. So if it does start to drop back below the 178, 177 area, then that would be obviously a short-term negative, be looking for a test at the bottom of the range. But in order to move to stage 2, we need to clear this 190 area convincingly. We drop to a lower time frame on this, maybe the 195 minute 2 bars a day here. You can see the short-term structure developing at the moment. Again, short-term buy and climax, almost rally, secondary test. We're in our base, further testing. So looking for this to develop, potentially push out, and then we could start to move into stage 2. But if this does roll over here, develops as a stage 3, then rolls down, rolls back over into here, then obviously, as I said, be looking for a test at the lower end of the range at that point.